Hello, my name is Andika Duncan. I am the broker of Showstopper Realty here in McKinney, Texas. And today I have Will from GFS Mortgage, and I have whole lot of questions to ask him about mortgages. But before we do that, Will, can you introduce yourself in a few words?
Yeah. Yeah. Hey, I'm Will Taveras. I've been with GFS Home Loans for about a half a decade now. Love what I do. Feel like I do a really great job of it. So I'm super excited to answer some questions for you guys. Andika has been awesome putting together this live webinar. So let's just go ahead and jump right into it. Yeah.
Before you do that, can you tell the viewers what areas you serve?
Yeah, so I live in Princeton. That's kind of where I'm at. It's where I'm centered at. DFW in general is really my bread and butter. I do a lot of work in Collin County specifically, but I can reach as far out to the borders of Texas if you need me to. I am licensed in the state of Texas, so I can do just about anywhere. A variety of programs that we offer to meet everybody where they're at.
Okay. All right. So we have a lot of questions to answer. Let's jump right into it. What's the difference between pre-qualification and pre-approval?
Okay, yeah. So there's a pretty notable difference between a pre-qualification and a pre-approval. When you're getting pre-qualified, usually it's not as in-depth. Okay, this is usually a conversation you're going to be having with your lender. We'll go over, stuff about your employment, where you're looking to buy, kind of get a rough idea of your situation. And we can spit out a pre-qualification based off of essentially just your word of mouth. We can give you a good idea of exactly what it is that you'd be able to purchase once we step into the pre-approval stage. So when you're pre-approved, that means that we've actually gone through and collected all the documentation. We've had the opportunity to get your file pre-underwritten. So we collect all your income documentation, your assets, really just try to get everything to a point where we can pass it off to an underwriter. And a pre-approval is really what you're looking for if you're going to go out and start shopping with a realtor. So that's kind of the difference. Pre-qualification can be done pretty quickly. Pre-approval, I can get it knocked out within a day, but it's a lot more thorough.
Yeah. So also, please explain to first-time home buyers the difference between pre-approval and final approval, because there's a process before closing, and sometimes we meet people that think that once they have a pre-approval, their loan is fixed, and it cannot be the case every time.
Yeah, yeah. So the pre-approval portion, that's where you'd get a really good estimate of what the property numbers are going to look like, your taxes, insurance, the monthly mortgage payment, your cash to close. Now, these numbers, a handful of them are estimates, right? Once you get pre-approved, you actually go out shopping with your realtor and you find an offer you love, or excuse me, you find a home you love and submit an offer on it. Then we can start digging into the details, getting the actual numbers for the property. We'd reach out to the title company. Title company is going to give us a good list of fees. And your numbers from the pre-approval stage to your actual final approval, they do change. It's never 100% spot on, but it's my job as a lender to give you an accurate estimate. And usually I'm not off by more than a few $100, depending on what fees are coming through. So,
Okay, that I think it's very important to understand.
yeah, absolutely.
Okay, next question. How much down payment do I need to buy a home in Texas?
Yeah. So if you're a first time home buyer, you probably have heard something of 20%. That's kind of the misconception that I run into quite a bit is that people think that you need a lot more money than you actually do. So we actually have programs that can get you into a home for as little as 0% for a down payment, right? If you're to go with the USDA option, or if you're a veteran, you do have that kind of a program available to you, 0% down. But typically, what I'm working with is going to be FHA home loans. That's a minimum 3.5% down payment. And then conventional home loans for a first time home buyer, we can go as low as 3% down on.
Okay, what are the requirements for FHA, VA, conventional, and USDA loans?
So all of the government loans, okay, that's what we're going in, FHA, VA. Okay, so FHA, VA, and USDA. USDA, it's going to be restricted based, there's going to be some income limits on it. There's going to be location specific restrictions. So it's designed particularly for rural areas. So there's not a lot of that in Collin County, but if you were to go out a little bit further, then you could definitely find a property that could qualify for it. Um, FHA, what was the question again? You were just asking what were
What are
the
the requirements?
yeah, requirements. So none of these are specifically first-time home buyer required loans. Really, what's going to be required is that you cooperate with a lender to figure out which one is best for you. Um, Credit score requirements on a conventional home loan, they're going to be a little bit tighter than, say, something like FHA, VA, or USDA. Down payment requirements. They all offer a variety of down payment options. What else? Um,
So basically, you just look at the client's financials and advise them on which one is the best option
Yeah,
for them.
absolutely. I mean, what we're doing for you is we're creating a tailored loan program specific to your needs. Every borrower is different, every client, every home is different, and financing options can be different for each individual person. So, yeah, we're tailoring something specific to you, and it's my job to advise you on what exactly is going to be the best fit for you.
Okay, what is the minimum credit score required for a mortgage?
So we GFS Home Loans. We're one of the few lenders in Texas that go down as low as a 500 credit score.
Oh, wow.
Now that is it's a very very picky deal to work out, right? If you're going to be working with scores below 580, there's a larger down payment involved, 10% minimum, but we can go as low as 500. For conventional, 620 is the minimum, but we usually like to see that more in the 640, 660 minimum range. VA, there's not really a credit score requirement on that. Um, let's see here,
The
USDA
VA is
620,
more
okay.
the eligibility, correct?
Yeah, exactly,
Okay.
exactly. There's quite a bit quite a bit more that goes into qualifying a VA borrower than just credit scores. It's a very different process for sure.
Okay. What is a private mortgage insurance and when is it required?
Yeah, PMI. So private mortgage insurance. Let's say you're going on a conventional home loan program. That's usually where this gets caught up. So if you're going to be putting less than 20% down, you have to pay what's called private mortgage insurance. It's insurance that insures your mortgage. I mean, that's as simply as I can put it. If you put less than 20% down on private mortgage insurance, or excuse me, on a conventional home loan, then you do have to get private mortgage insurance. It's calculated as a percentage, and it's based off of your credit scores, your debt to income ratio, loan to value, things like that. Um, and there's kind of a counterpart to that, just MI, mortgage insurance. If you're going to be using an FHA home loan, then you have mortgage insurance on it at all times. That doesn't fall off or anything.
So
But
is it added to the monthly payment or how do they pay that?
Yeah, so it is added into your monthly mortgage payment. It's not something that you have to pay out separately. It's all taken care of through escrows. Just your monthly mortgage payment should cover it. But it is a number that we definitely let you know about because it's important. Private mortgage insurance can be a little bit more expensive than, say, mortgage insurance on an FHA home loan. But again, it's all stuff that we have to sort out during the process.
Okay, great answer. So the next question is, what are the current interest rates and how do I lock in a rate?
Okay. Yeah. Well, everybody likes talking interest rates. Everybody, that's usually the main concern that I hear from first-time home buyers and just buyers in general. What are interest rates right now? So I quoted one this past week here. I was getting around 6.125, which is a big improvement from earlier this year, but that's a very well qualified borrower. Very
And
good
this
amount
is
of
September 2024 because we will be
yeah, September 2024.
replay
Yeah.
these videos as
Yeah,
well.
yeah. Yeah, so I'd say they're sitting in the low sixes, low to mid sixes. I've seen people get high 5% interest rates. Um,
We haven't seen those in a minute.
Yeah, it's definitely been a while. If you're refinancing, I've been seeing a lot of really great interest rates in the mid to low fives or mid to high fives, excuse me. If you're doing something like a streamline refinance. Um, and how do you lock in a rate? So this is something that I like to get into mainly because a lot of buyers don't understand that you need to be under contract to get a rate, to be able to lock it in. So if you go out and shop, right, I get you your pre-approval, and I tell you the interest rate today at this moment is a 6.25. Until you actually find a home, that number can't be locked in. Once you go under contract, we're going to have to reprice your pricing and see exactly what interest rates are available at that moment.
Okay, so let's say that they are pre-approved for 6.2, but by the time they find a house, it goes down to 5.8 when they get the contract. And the closing process takes a month and a half, it goes down another, let's say 5.5. So which rate will they get?
So what we would do in that situation is if we're thinking that it's going to be that interest rates are going to stick around where they're at, right? Say we're in the high fives, we'd probably lock you in the high fives. It'd be a conversation I have with you based off of the information that I'm digesting from the markets, a few newsletters that I get, kind of predicting where it's going to go. If I think it's a good time to lock, I'll lock you right then. It also depends on how soon you're looking to buy. The closing date, that is. Um, if interest rates drop from the time that we lock your interest rate and the time that you close, if it's a substantial drop, we can always go back and renegotiate with our investors. So it's not necessarily set in stone per se, but it is something that we can keep an eye on for you guys and make sure that you guys are getting the best deal possible.
That's awesome. That's
Yeah.
good to know that they do have the flexibility. If it goes up, they already logged in at a lower rate. And if it goes down, they may have the possibility to renegotiate it.
Yeah.
So
Yeah, absolutely.
that's always good. All right. Next question. Can I qualify for a mortgage if I am self-employed?
Yeah, you sure can. I do a lot of work with self-employed borrowers. There's an array of different options for them. I know that a lot of self-employed borrowers can have a problem qualifying just based off of the way that taxes are done. If you can't qualify through, I'd say, conventional means, providing your tax returns, then we have options like bank statement loans. We can take a look at your bank statements and calculate your income based off of that. Or we can do something like a profit and loss program, where you'd have your CPA drop a P&L, and we'd go off of that for your income. It would be unaudited, but there are options for you. But it's no different than anybody else. We may have to collect 2 years worth of employment history for regular borrowers. With a self-employed borrower, we're looking at bank statements, taking a look at your tax returns for the past 2 years, and trying to calculate it that way.
Okay, I have a small question here about the two
Mm-hmm.
years of employment, because sometimes people think that I've been working all my life, but I just switched work like 3 months ago, and I'm doing something totally different. Would that fly?
Sure. So long as there hasn't been an extensive gap in employment, something like 6 months,
Okay.
as long as you're getting paid and we can document that, so long as you're not switching over to something that's a commission based only, say you were a W-2 employee prior, and then you switch into something where now your bonuses affect your income. It's not really a problem if you're going from a W-2 based job to another W-2 based job, salary or hourly. We just need to take a look at some pay stubs. But again, it depends on if your pay changes, the way that you're paid specifically, if
The
you're going
way and the
1099 or something like
amount.
that. Yes, absolutely,
Mhm.
absolutely. And if it does decrease, that's not the end of the world. Say you take a job that's paying you less, we can still use that, but you're going to be getting qualified off the lower income.
Okay, that's important to understand.
Yeah, absolutely.
All right, the next
These
question.
are these are some great questions, you guys.
The next question. What are closing costs and how much should I expect to pay?
Okay, so closing costs. There's a good number of fees involved in a mortgage, not just to your mortgage company, but you also have things like your title work, credit reporting. There can be certain products that your lender is offering you that cost money, but they improve your experience. They make it easier for you to close on a home. These are the kinds of things that'll get wrapped in as closing costs, discount points for an interest rate if you're going to be paying to buy down your interest. That gets included in this number as well. Typically, you can expect anywhere from 2 to 5% of the purchase price as closing costs.
And that's not including the new rule after the NAR settlement, where buyers are now required to sign a representation agreement and agree to pay the buyer's agent commission.
Yeah, that does not include that. If you include that, then yeah, it can be
Yeah,
quite a different variation there for sure.
yeah,
I mean, 2 to 7, 8%, right?
yeah,
Depending on how much you'd be paying your buyer. But that's an entirely different conversation as well, right?
yeah.
There's a
Well,
lot of
we
different
always
things your
hope to
buyer's agent.
get the seller to pay the buyer's agent commission, so that we try to negotiate that with the seller and the seller's agent. So hopefully,
Yeah,
we will when we go out to look at houses, they don't have to pay that extra three
yeah.
three
And
percent.
it's still common and customary for sellers to pay the buyer's agent
Yes,
too. You know, some
yes,
things may have changed, but it's still common. It's still happening.
yeah,
Nothing drastic, I feel, is really changing on that
yes,
aspect.
I agree. Okay, what documents do I need to apply for a mortgage?
Sure. So there's quite a few. If you're a homeowner, if you're a first-time home buyer, it varies, from borrower to borrower. I'd say for just starters, pay stubs. Absolutely going to be taking a look at your most recent 30 days worth of pay stubs, W-2s for the last couple of years, tax documentation for the last couple of years. If you're self-employed, we'll be taking a look at your tax returns, maybe picking out some bank statements. Um, it really varies from borrower to borrower. But we do a really great job of making sure that we assess each borrower individually and tell them exactly what it is that they need to bring to the table. But for the most part, it is income documentation. That's the majority of what we have to get put together.
What
Um,
about assets?
Assets. So yeah, bank statements. That's usually what we would use to record or to verify assets. We don't usually get that far into it, say right off the beginning. If you tell me you have $40,000 in your bank account, we're probably going to go off the assumption that you do, and we can collect your documentation on that at any given time. But primarily, when you're getting pre-qualified, what we're looking for is income documentation.
So every single cent needs to go through a bank, no cash. Like people cannot show up to the closing table with a suitcase full of dollar bills, correct?
Yeah, yeah, in the lending world, we cash is not king. You definitely have to have that money put in a bank account because we have to have a paper trail for it.
Correct.
If you have $1 million stashed in a Swiss bank account somewhere, that's fine if you can get it over to us as long as we can document it. But if you're stashing money, cash in your walls and under your bed, you're going to have to go hit the nearest bank and deposit that before we can even start using it. If you're going to be using cash specifically, the best option that you have is to deposit it into your bank account, and it'd take about 2 months to season, is what we call it in the industry.
Oh,
And then you'd be able to use that money. But yes, Annika, you're right on. It has to come out of a bank account.
okay. The next question, can I use gift funds for my down payment?
Sure. Gift funds on a down payment. Absolutely. We see that a lot with first time home buyers. There are some limitations, like let's say on investment properties. depending on exactly how we structure a deal, there's limitations. If we're doing something like an ITIN deal, somebody that doesn't have a social security number, there's a few different reasons why you wouldn't be able to use gift funds, but for the most part, you can absolutely. It just has to come from a family member, or a relative of some sort. Sometimes I've seen employers give gift funds, but you can use that money. That is an option for first-time homebuyers for
And
sure.
again, you have to show the paper trail. So it
Exactly. Yep.
cannot be cash.
Yeah, we're gonna have to speak to the person that's giving it to you and get proper documentation from them on where it's coming as well.
Okay. How does my debt to income ratio affect my mortgage approval?
Yeah. Debt to income ratio. If you're not familiar, I think it's pretty self-explanatory there. Debt to income ratio, how much debt you have versus how much money you're bringing in. It's a huge factor in the qualification process. Um, I mean, if you're a first-time home buyer and we're going on something like an FHA home loan, we can have a pretty high debt to income ratio. But for most programs, we're definitely being conservative on it and just trying to make sure that you understand that, hey, we're talking about, a third of your income going towards your mortgage payment. It really does dictate exactly how much you qualify for. Um, does that kind of answer the question? I,
Yes,
I feel like I
yes.
could go on and on
Yeah,
about it.
no, it's pretty good.
But yeah, your debt to income ratio is probably the biggest factor in not just, whether you qualify for the loan, but what your interest rate will look like. It affects quite a few things.
Okay, the next question is, can I roll closing costs into my mortgage?
Not technically. Now, it's not something that we can finance into your loan. But we are able to get money from sellers sometimes that can cover it. And that's a great avenue if you're worried about your closing costs. But no, it's not necessarily something that you can finance throughout the loan. We would just structure it as money coming from the seller, um, and use it to cover some of your closing costs.
Okay, next question. Will my mortgage payment change over time?
Yeah, not quite like a rental increase, right? The amount of money that you'd be getting increases probably annually with a rental property. Your landlord could probably raise it quite a bit, but with a mortgage, what's going to stay the same is going to be your principal. That's the amount that you borrowed, and your interest, principal and interest payment. That'll stay consistent throughout the life of the loan. But there are things like property taxes and insurance. Homeowners insurance this last couple of years has changed quite drastically. It's definitely something that we consider when we're qualifying you, because we don't want to stretch you too thin and then say, next year your insurance premium jumps up. So I wouldn't say that your mortgage payment stays exactly the same for the life of the loan. There are a few things that can change on it, but for the most part, it's not going to increase drastically. Your property taxes, so long as you file a homestead exemption, that gives you a bit of a tax credit, and saves you quite a bit of money, and make sure that your taxes don't jump up too far. But no, it doesn't stay exactly the same. It'll stay pretty similar though.
Yeah, and then also for the home insurance, they can shop around. So it's not like once you buy your first year, you have a contract with an insurer and it's an insurance company, and the next year your rate goes up, you have the right
Yeah,
to shop around
absolutely.
and find a better rate.
Yeah.
Okay, then how does the appraisal process work?
So the appraisal process, I mean, once you go under contract, that's kind of when this would come into full swing. Now, I guess from a lender's perspective, I mean, the buyer's going to be paying for the appraisal. You might be able to add a little bit more to the answer here, but from our standpoint, once your home gets appraised, whatever pre-qualification, or excuse me, pre-approval that we gave you, whatever was put on the contract, if that appraisal comes in low, then we'll have to start doing either some negotiating with the sellers, or we could have our buyer, if they're able to cover the difference. Um,
Are the appraisals coming at value?
yeah, for the most part, I think we're kind of in a pretty level playing field at this point. I don't think homes are losing value. I think some people may be listing them a little bit more expensive than they should be, but for the most part, appraisals have been coming in right on par, if not within a few $1,000s, which is practically negligible. Um,
That's a
yeah,
good indicator of the market. Thank God.
yeah, yeah. It's nice that homes aren't depreciating. It's nice that they're still worth what they're worth. So.
Okay, so let's move over to the sellers. When do I need to pay off my mortgage in full before selling my house?
So theoretically, yes, but there's a product that you can use to move into your next home without selling your current home. It's called a bridge loan. If you're familiar with it, you're essentially, buying a new home and putting your home on the market. And once your home is sold, um, you're still in the new home. It's a really great product. Okay, so the way that it works is, say you want to go out and get qualified for a bridge loan. The bridge loan, we're going to treat it just like you already sold your home, and we're going to qualify you for your next mortgage without even thinking about the last one. You'd go out, you'd find a house, you'd buy it. Hopefully by then your home would already be selling. But if it doesn't, you have a grace period where you're accruing interest. You don't necessarily have to make payments, but you are accruing interest onto what's going to be your new loan. Once your home sells, we wrap it all together into one product, and it's essentially a refinance. But this is fantastic because homes are sitting for a little bit longer right now. That shouldn't limit you to getting into your dream home. So it's nice that we have a product that we can offer for that. But
Okay.
for the most part, if you can't qualify for a bridge loan, which I don't see why you wouldn't be able to if you can already qualify for a home, then yes, you'd probably have to sell your home before you moved into your next.
And then when you sell your home, the mortgage is paid off at the closing. The title
Yes.
company takes
Yep.
care of that.
Exactly. Yep. Sorry if I didn't make that clear, Andika.
No,
Thanks.
no, we just add all the details so everybody understands how that works.
Yeah.
Talk to me a little bit about loans to do improvements in my home. Let's say that my home is 25, 30 years old and it really doesn't look very good. Like I have original floors and I need to change the floors, maybe update the kitchen or the bathroom before I can sell it at the highest possible price. How do I go about getting some equity out so I can make the renovations before
Yeah.
selling?
Sure, and you hit it right on the head, right? I mean, equity, home equity is really going to be your best bet for trying to make those improvements, unless you want to throw the money out of pocket at your house to try to get it worked up nicely, right? We do have options for that. To get into your home equity, I'd say in this situation specifically, probably something like a home equity loan would be your best bet. And I mean, essentially, you'd just be taking a little bit of money out of your house, throw it at the repairs you need to make, and then you could list it on the market with all the nice new improvements to it. If you're maybe looking a little bit further out, like you kind of want to get these renovations done soon, and you're going to sell your home in 6, 7 months or so, a cash out refinance could make a little bit better sense for you. If we were to kind of put the numbers side by side, but that's really how it would work: a home equity loan or a cash out refinance.
All right. Very,
Yeah.
very great answers today, Will. Is there
Thank you.
anything that you would like to tell new home, first-time home buyers and people that are downsizing or upsizing about your services?
There's programs to help out with down payment assistance. If your credit is really your biggest hurdle, like I said, we can work with as low as a 500 credit score. And if your credit is kind of bruised up, I have tools, some tricks up my sleeve to help you get it up as well. That's something that I love doing for people, is helping them build their credit back up. We've got a few different tools that, I mean, they just work miracles, tell you exactly what it is that you need to do, and really help us game plan, give you this long-term game plan and strategy to get into a home. So first time home buyers, I just want to encourage you, if you're worried about down payments, if you're worried about your credit scores, you should reach out to me. I'm not going to bite. Okay. I'm here to help. And I really enjoy helping people see the big picture and achieve their dreams of home ownership. Um, Now, when we're talking about how soon you can close, um, this is another thing I want to stress is the sooner that you reach out to me, the better you are at communicating with me. The easier the process is going to be. I can get people's homes closed in as little as 2 weeks. You know, if you're able to
Oh.
meet me where I'm at, I am able to get moving pretty quickly. Credit scores. I get this question a lot when I pull somebody's credit. Um, People are worried about what it's going to do to your credit scores to have a lender take a look at them.
Mm.
And to be quite honest, it doesn't really do much. You know, you're not losing credit tiers by having somebody take a look at your credit. Um, when you do start looking for a home, you have about a 14-day grace period after that first credit report pull to shop around and look at, you know, have some people take a look at your credit with no effect to your scores. Another note on this is that the credit models that we use for scoring your home loan, they're a little bit different than what you see on that application when you pull up Experian or Credit Karma, whatever it may be. The credit models are a bit different. So when you're talking to us and we're taking a look at your report, the numbers that we're giving you, that is your credit score. It can vary a little bit, fluctuate a bit, but we're taking a look at all three bureaus. And I just want to let you know that it's not destroying your credit to have somebody take a look at it and help you work on it. So
Okay, I just have one more question here before
yeah,
we finish, because I did work with a first-time home buyer many, many years ago, and I always take my time to explain to them the 10 commands of qualifying for a loan, because once you get pre-approved, that's your financial situation registered with the lender, you have to keep that or improve that, correct? Because
yeah,
if you have late payments showing up on your credit report, or if you open another credit account, buy a new car, start buying furniture before you close on your new home, now, on the last day of closing, the lender will look at, this is the final approval. So the lender will look at your financials again and verify everything from your employment to your credit score. You have
yeah,
to make sure that everything stays the same or improves from the pre-approval until the day of closing.
yeah. You know, I like to tell people that you shouldn't do anything different. Okay, you want to keep it as similar from the start to the end until you actually close and sign 1,000 papers like you always do, and you get handed your keys. Yeah, don't go out financing a bunch of stuff. It's really important that you try to maintain the same image from the start to the finish.
Or
Now,
improve.
once you close, the world is your oyster.
Yeah.
Okay, that's a whole different ball game. But yeah, you're right on, Andika. It's really important that any changes, right? Employment history, anything in terms of your income, um, credit lines. If anything changes, guys, you need to let your lender know. We're gonna find out, okay? We're gonna find out one way or another. And what we don't want is for that to be the day before your closing, and then we're scrambling to try and fix the situation.
Yes,
Um,
it can be very
so,
hectic. Let me just tell you the little story that I had with this buyer. She understood that she was approved for the loan. She went on a vacation to Disney World with her kids, and she was just
ooh,
planning to drive back or fly back to the closing, and she quit her job.
oh my,
And when we found out that she quit her job, we had to like, no, you have to get your job back. You have to get your job back. And she was a nurse, and she was lucky that they took her back.
My goodness.
So it was hectic to try to close with someone who does not answer the phone because she's on vacation and
And she
quit
just
her
left
job.
her.
Yeah.
Yeah, that is that I'd say that's a nightmare situation for the most
Yeah.
part, but that's the kind of stuff that we overcome, right? I mean, that's
Yes.
like
Yeah.
you said, you guys got her job back and got her to the closing table. That's what any good real estate professional is going to be able to do for you. So yeah,
And I also want to add that we real estate agents like to work with local lenders because you guys are local, you understand the
yeah,
market. You have appraisers in the area that come out and they understand each market because you have to be very localized. Like every subdivision has different numbers. You have to know the numbers, and you also approachable and accessible. So when we have questions or we need the pre-approval letter, we can reach out to you and you can give us an updated pre-approval letter, not giving away all the money that the people have, but only the
yeah,
amount of money that we are putting into the offer. So we don't disclose your financial information unnecessarily, only to the extent that we can get you the home that you want. And with banks, when we work with banks, it's always a different person who answers the call. It's very
mm,
difficult to get an update on the loan, and it takes longer.
yeah. Not to mention Saturdays and Sundays, huh?
Yeah, yeah. So time is of the essence with all the contracts, and working with a local lender is crucial, is crucial.
Yeah, thank you for that. I can't agree more. I can't agree more. I think that the expertise that we offer, the flexibility that we have, we're the best fit for anybody looking to buy a home.
Yes,
Is working with somebody that's going to be able to get you across the finish line and answer all of your questions, no matter what time it is. I mean, there have been times where I'm writing prequals in my sleep.
I believe
I'm
you.
answering
I
text
believe you.
messages. It's important that I'm there for you guys. And I love it. I love being the person that picks up the phone and reassures you the entire way.
I think the viewers can even see your energy. So you are just full of life and excitement, and I believe that all of our home buyers are in good hands when they work with you.
Oh, thank you, Andika. I really appreciate it. I really appreciate it. Um, it's been really nice getting to answer some of these questions. I'm sure there's going to be a lot more.
Yeah.
But would you be
We,
able to tell us a little bit about the process too?
Uh, well, home buying and home selling is two different. There's so many aspects. There's so many life stages where our clients are, and our job as a real estate agent, actually, I'm a real estate broker, is to meet them where they are and advise them the best way on the next biggest investment probably of their lives. So we love first-time home buyers. We have education classes so they can actually learn a little bit of negotiations, understand the process before they get started because it can get overwhelming. And
Oh
then
yeah.
again, once you are a homeowner and your needs are changing and you need to sell your current home, either you are upsizing or downsizing, there's a totally different game because your needs, wherever life stage you are, is totally different. So we always meet you where you at and give you the right advice. And also we work with investors. So if you are at a stage where you have a little bit of money saved up and you want to start buying investment properties, we know a lot of investors that are flipping homes for resale, or you can just buy one and we can help you rent it out, find a qualified tenant, and we put the qualified tenant in there so you can be sure that that tenant is not running down your house and they are going to make the monthly payments on time. So we have a whole array of services, mostly residential. We also do land, sale, and purchases. So the only thing that we don't do is commercial. So we
Okay.
only do residential, agricultural, or land.
Yeah. You're making dreams come true,
Yes.
helping people get into that home. I love it. Okay. Good
And then
deal.
on the seller side, what I really think that we stand out with is that I am also a real estate photographer. I've been doing this since 2016. So I've shot thousands of homes. Not only am I in homes on a daily basis and I understand what's coming on the market. So if you are looking, I can find you a home before it hits the market. But also we really maximize the value that you have in your home. We can advise you on minor renovations, repairs, whatever makes sense without breaking the bank. So only the minimal expenses that you have to spend on maximizing the return of your investment, because you worked hard for that equity and you deserve every
Yeah.
cent of it. We do I do professional photography, twilight pictures, 3D virtual tours. I use a lot of AI in the marketing, social media, advertising. So everything is top notch. Now with the new NAR rule, open houses will come back again, because if there are buyers that cannot sign an agreement with a buyer's agent for the commission, they will try to make a deal with the seller. So we offer open houses on the weekends. We work with you on the schedule. We do staging. We can do professional staging if your house is completely vacant. We do occupied staging, so we can have a person come into your home and just give you ideas on how to maximize the layout, what you need to take out, what you can add to make it a little bit more appealing. Or if everything is vacant and you don't want to put in any extra marketing budget, then we have virtual staging. So basically we can put furniture into your rooms, living room, dining room, bedrooms, office, kids' room, and outdoor furniture onto the pictures. So the buyers can actually see how to use the space and what they can do with the rooms. Because sometimes when you walk into a vacant home, it may appear either bigger or smaller depending on your
Yeah.
imagination.
No
And
joke.
once you
And the
close
layout.
and you bring your furniture, it's like, oh, this is too small. So the virtual staging really helps out
Yeah.
visualizing what you can do with the space.
Yeah. I got a question for you, Andika. So right after someone comes to me and I go through the process of getting them pre-approved, when I send them out to you, what's kind of the first thing that how do you get people set on a home search? How do you get them looking in the right area?
Well, yes. So definitely we will need to know their budget. We will need to know what price range they can qualify for. And then we will sit down with them. We have like a really detailed orientation explaining the
Okay.
process, finding out about their needs and wants and how to meet. If, like, needs are always what you really, really need.
Yeah.
Wants are is like what would be really nice, but not necessary. So we
Yeah.
really sit down, because this also changes over time. Once people start to look at homes, they may have new ideas, or you know what, I thought I
Yeah.
needed a big house, but maybe in this subdivision I like it better, but these homes are newer, I can go with the smaller one. So we always reevaluate your needs and wants as we look at more homes, so you understand more of what you really want. And with the orientation, you will have a clear idea of the entire process. But as we go through the entire process, every step of the way, we give you the next step, because there's just so much information
Yeah.
to understand and record that. Like, for example, with that first-time home buyer, I did sit down with her twice. Once we were looking at the same home, and I was explaining her the 10 rules of what not to do before you close on your house, and because she didn't remember. It's too much.
Mm.
So
Yeah. There's a lot going on in the process.
yes, so
And having you there to guide them is
we
huge.
keep repeating, we keep telling you the next steps. Always ask us question. Don't feel that there is a stupid question. There's no such thing. anytime you have a question about the process, buying or selling, we are available to answer the questions because we are there to maximize your profit. If you are a seller or if you are a buyer, we definitely want to get you the best price and the best terms because you will be living in that home based on current numbers is up to
Yeah.
8 to 10 years
Yeah.
on average. So it's very important that you are informed before you close on your home.
I love it. I love it.
Yeah,
Well, cool deal.
yeah.
Let me see. Do I got anything else for you, Andika?
I think the other question that I like to answer is what is the working relationship between our clients and our agents? We are very approachable. Uh, we can answer questions through phone, text message, email, whichever form that you prefer. Of course, there are some youngsters who prefer text messaging. Some people prefer a phone call. And every time, once we discuss something, we always follow up in an email. So there is no misunderstanding or confusion. That we will just send a follow-up email like this is what we discussed. I explained to you the next step of the appraisal. And that way you're always in the picture of what is happening in the transaction.
Yeah.
So
Cool deal. Yeah, it isn't fun to be making the biggest purchase of your life and not really knowing what's going on.
no,
And I know you do an excellent job of making sure that your clients know exactly where things are at
they have to.
and
They
really
have to.
guiding them through the process. I think people tend to underestimate exactly how complex and complicated from A to Z the process can be. And if you don't have the right realtor in your corner, kind of coaching you through it all, it's really easy to get lost and a little bit confused. And you know, if you want the best experience possible, it's going to take somebody being there for you, like
Yes,
Andika,
and
you
we
know?
we have seen that during COVID when home prices were shooting up to the sky. Like if you listed one home, uh, there were like 100 offers on it the very next day with a
Yeah.
$100,000 over asking price. And you do have to understand the consequences of your offer. So when we are making an offer on a home that you like, we will go through each and every item of why we're offering this, the terms. We work with your schedule, your closing schedule. Obviously, we accommodate the seller as well, depending on which side of the transaction you are. But you have to know and understand all the terms in the contract because it will
Mm,
affect you for the duration of your home ownership.
mm, love it. I love it. Well, Andika, I'd like to put a little sense of urgency on here too. Right now, um, right now is the sweet spot between lower rates and what we've been experiencing the last couple of years. For a couple of years now, all lenders have been letting people know, as soon as rates start to drop, it's going to be a madhouse out here. People are going to, you just mentioned that situation where a couple of years back, we had people submitting, 20, 30, 40 offers on a listing within a few days. It really is, it may not be that bad. But if you're thinking about buying and you're wanting to take advantage of lower interest rates have started to come down already. Okay, if you're thinking about waiting a few months, you need to start now. If your purchase is 3, 4, 5 months out, it's important that you start now and get ahead of the game so that when you find that property that you're really falling in love with, we can get you in there just as fast as possible. Because competition is going to get to be a very big problem as soon as rates start dipping into the mid 5%. It's going to get pretty crazy out here. So if you want to buy a house soon, it's important that you get ahead of it and really be prepared for what's going to happen in the next few months.
And also, if they are planning to make a move in 6 months because of a job change, or they have to come and move to Texas, for example, and we have some viewers out of state, just get in touch with us. The sooner the better, so we can learn what about you, about your needs, And whenever the time is right, we can jump right on it.
Absolutely. Absolutely. Mortgages and buying a home is a complex process.
Yeah.
And it's worth the amount of time that you put in getting ready, for sure. So,
All right. I think
perfect.
that's all. We answered a lot of questions today, and we are
Yeah.
planning to update our viewers probably monthly.
Yeah.
So we can give them current market trends and information that definitely influences their decision.
Yeah. Because it is going to be a crazy next few months. Every
Yeah.
month is going to look a little bit different than the last. So,
Yeah.
y'all stay tuned.
Thank you, Will. Thank you for answering all these
Yeah.
questions for us.
Absolutely. Andika, thank you for your time. We'll talk soon. If anybody has questions, you can reach out to me. I'm sure my information is going to be on here somewhere. But I'm always around, ready to help, and super excited to work with you.
And so am I. Thank you so much. Thank
All
you for
right.
watching.
All right.